Hey folks, Dan Frio here with your closing bell for November 18th, 2025. Now, I told you mortgage rates weren't going to move until Thursday, and well, that's panning out today, even with the dismal jobs report that we got from ADP. Yeah, ADP came out with some jobs reports today. We're going to go over those in a second. But the first thing I want to go over with you guys is that new mortgage program not the 50-year mortgage that Trump talked about last week, the new portable loan that they're now announcing. So is there a possibility of that one actually coming to fruition? Well, that's what we're going to talk about in today's video, because each day, folks, when you come here, my whole goal is to help to explain to you guys what in the heck's going on with those and the whys behind it. So today, here's what we want to talk about. The 50-year mortgage, that was kind of in vogue for about 48 hours, kind of like me. I was in vogue for about 48 hours. I was on News Nation. I was on AOL, NBC. I even had calls from the Hill trying to explain the 50-year mortgage. Now what they're looking at is this thing over here. The FHFA, they kind of oversee all of mortgages. They came out now and says, what if we made mortgages portable? So if you have a low rate now, you can maybe take it with you. Well, let's talk about that first, and then let's take a little bit of a deeper dive into these employment numbers. So here's how this is going to really work. If you're looking to move, you might be able to move that loan with you. But until then, if you're looking to refinance, if you have a higher rate, I might be able to help you. Okay, folks, my name is Dan Frio. I'm actually a federally licensed mortgage loan officer where I'm licensed actually in all 50 states as well as Puerto Rico. My slogan here is one application, one credit pool. We're going to compare your loan to over 30 different lenders. But if you're a homeowner, I need you to fill out that information right up there. The RateWatch 2.0. What you're going to provide us is what mortgage rate would you like to be notified at when it hits there? And what's going to happen is I'll reach out to you. Yeah, we don't sell the data. It will be me personally reaching out to you. So that's what I want to help out those homeowners with. But until this really comes to fruition, let me explain how this might work. Okay, so the portable loan piece is this. You'd be able to take your mortgage with you. It's never been tried before. It's going to take a lot of legislation changes and just you're going to have to change all the paperwork, because the paperwork on mortgages right now say you can't basically take your mortgage with you. So the probabilities of that happening are pretty slim, kind of like the 50-year term. The assumable mortgage, that's a whole different story. So that can be done. And it's being done right now. If you have a FHA or VA loan, your loan is assumable. So if you want to learn more about this, go to my blog for today, and I'll be having a video come out this weekend that kind of takes a deep dive into comparing these alternate programs that they're coming out with. But I think the portable loan piece is kind of getting flushed down the toilet, kind of like the 50-year term. But the assumable rate, that might be a mortgage product that will be available here shortly. You can mark my words on that one. That could be a viable alternative. But let's get over to today's news. Here's what I want to show you guys. Today we got from ADP. Now ADP, I hate their numbers, and they're coming in and saying there's 2,500 jobs being lost every week. Well, if you look at the jobs numbers, let's jump over the Bloomberg calendar for that. If you look at the jobs report, here's what came in today, and here's why the markets really didn't do anything. We had initial jobless claims coming in. The last reading was 200 and let's say 220, and the current number is 230. Okay, nothing major. What we were hoping to not see is huge jumps in these numbers, and we didn't. Okay, so then on the continued claims, it's 1.94. It was 1.91. There was an analysis being today. It says it might be 1.95. So that's where these are going. Oh, that's actually right down through here. They updated down through here. So we went from 1.94 to 1.95. Yes, it's an increase, but not a massive increase. So what we're waiting on the Fed for is this. The Federal Reserve came out last meeting and said, okay, we cut rates because of why? Not inflation, because of jobs. Well, now this report is coming out and saying, okay, the jobs market isn't really crashing like we thought it might be. So that's what you're seeing in the markets right now. Stability. Finally, a little bit of stability. Not in the stock market. The stock market's getting hammered today. We'll go over that in a second. But here's what I want you guys to look at. Here's a thing that we follow each day. And this is going to tell us what's the most probable outcome from the Federal Reserve's next meeting. Now, they're meeting in 22 days. They're going to come out and they're either going to cut rates or they're not going to cut rates. Well, the day the Federal Reserve cut rates 2-3 weeks ago, the following day, the markets were basically told that there's a 95% chance of another rate cut this year, and there's only one rate cut or one meeting left. So that means the December meeting they had to cut. Well, then shortly after that, Chairman Powell, he runs the Fed, he came out and said, I don't think so. Now the probabilities of a rate cut, let's go down through here, are still less than 50%. So there's less than a 50% chance the Federal Reserve is going to cut rates at the next meeting. Now, here's my thoughts on this. So if you're a homeowner right now, I gave you some tools on how to kind of manage if you're trying to refinance or, narrow down a mortgage rate or mortgage programs. But let's say you're looking to buy in the next few months, maybe in the spring, or maybe looking to build. Well, let's look at this briefly. It doesn't really give us much guidance because it hasn't just yet, but they're supposed to cut rates, here, hopefully again, one more time in 2026, maybe 2 more times in 2026. So as we know on this channel, if you've subscribed down there and you watch my channel every day, you can know that when the Federal Reserve cut rates, it doesn't mean that mortgage rates are going to go down. So what truly affects mortgage rates and why? Well, each day I come in here and I explain to you guys what the bond market's doing and also all the economic news that's in the background. So I want you guys to understand, if you're looking to buy down the road or looking to build, here's the things that we need to look to. But would I focus in on each day to figure out what's going on with rates? Now, if you don't have access to this, I do have a link down below. It'll say MBS Live, my newsletter, and you can click that, and it's actually the MBS Live, and it's actually the mortgage rates are live as well. But we follow this bond rate through here. This is a mortgage bond. You really don't need to understand how it works, but all you have to do is follow that number up through there. If the number is positive, you might say, okay, good or bad. Well, if the bond price is going up, it means rates are coming down. So we want the prices to go up. Okay, so you probably aren't going to focus in on that because that's a reaction of data that's being filled into it. So what do you really focus in on? Okay, so the Federal Reserve was created for 2 mandates. One was inflation. The other one was the jobs numbers. Their most number one, that's probably bad English, their number one thing that they're trying to fight right now is the jobs market. And with data that comes out like this, I don't think that there might be any rate cuts anytime soon, because this is basically telling us the job market is soft, but it's not cracking. The Federal Reserve cut rates the last time because they didn't want it to crack. They're okay with it going up a little bit, kind of like inflation at this time, but they don't want it to crack, and it doesn't look like it's cracking. So that doesn't mean mortgage rates are going to go up, but that also doesn't mean they're going to go down any further from here. So if you're looking to buy a home soon, we'll figure out what rate you qualify for. And then when you're talking to the loan officer, hopefully it's us, we're going to qualify you at maybe 1/4 or 0.5% higher. Reason why? We want to make sure you can make that payment. It's affordable to you if and when rates might go up. Just protect yourself. Okay, if the rates don't go up, well, it'd be nice to have a payment that's $200 or $300 less than you thought. But if you're a homeowner currently, you got to go over here and fill out your information on our RateWatch tool so you can make sure that next time rates drop, you get notified and you can take advantage of it. If you're already in the process and you're like, Dan, I've already reached out to somebody and got a quote, what can I do? Because I know you have that slogan, one application, one credit pool. We're going to compare your loan to over 30 different lenders. Can you do it with my quote? Absolutely. Just upload your loan estimate right into there. What will happen is within hours, we'll have a video back to you. We're going to analyze it. We're going to break down what your fees are, what your rate is. And if we can beat them on the fees and the rate, I'm hoping to win you as a client. So thanks for watching today, folks. But my goal is, or my thoughts are, mortgage rates aren't really going to change much today or tomorrow. It's going to wait for the Thursday numbers. And that's going to be the true numbers from the federal government on where the jobs report's going from here. So stay tuned tomorrow at the opening bell so you can watch me come in and explain to you guys when the heck's going to go on with those tomorrow and why. So thanks for watching, folks. If you liked my videos and you want to subscribe, please do so over there. So every time I post a video, you get an alert. Thanks for watching. I'll be back here tomorrow at the opening bell. See you then. Bye-bye.